Bitcoin was performing, right? It was going up while gold was going sideways. But Bitcoin was marketed as digital gold. That was a whole selling point. Hey, gold is obsolete. Gold is irrelevant. You got Bitcoin. And I think that on the margins took away some demand from gold. I mean, maybe there were some institutions that would have bought gold, but because Bitcoin was there competing with it, they didn't buy gold. Maybe they didn't buy Bitcoin either, but they thought, well, why buy gold? Because, there's Bitcoin and, I don't know. I think that it certainly took away some of gold's thunder. A lot of the talk on the financial networks was about Bitcoin. It wasn't about gold. It was, Bitcoin, Bitcoin, Bitcoin. And so, but meanwhile, the smart money was buying gold the whole time that everybody was talking about Bitcoin. It was the dumb money that was being suckered in to Bitcoin. But I think that now that the Bitcoin bubble has popped, and over the next several years, the air is going to be coming out, I don't see that problem anymore from a marketing perspective for gold. I mean, nobody is going to be comparing Bitcoin to gold. Nobody is going to be talking about it as digital gold, as a safe store of value, as an inflation hedge. Everybody has pretty much come to the conclusion that it's a speculative asset. The problem is, what exactly are you speculating on? Because there's no value there. So if it's not digital gold, what is it? It's nothing. There's a lot of air that's going to come out. Look, these tokens are worthless. There's no value. Even when Bitcoin is down 95%, 99%, I still wouldn't buy it. Because when it loses that last 1%, that's 100% from where I would have bought it. And I don't want to throw away my money.
Fair enough.
But I need more regulations, that's for sure. Regulations are not the answer. I mean, FTX would have happened even without regulators. In fact, this scam might still be going on if FTX were regulated. Bernie Madoff pulled off his Ponzi scheme for a lot longer than FTX, and a lot more money, I think, was involved. But the reason it went on for so long is because he operated under the cover of the regulators. He had the SEC, he had the NASD, now FINRA. But if you go back to the original Ponzi scheme, right, his scheme didn't even last a year. There were no regulators there. So the market quickly put an end to Ponzi before too many people lost too much money. But because of the regulators, the current Ponzi, promoters, they actually end up stealing a lot more money. So I don't think we need more regulation. We actually need less regulation. We didn't even have the SEC until 1932. The New York Stock Exchange started in 1792. So we had 140 years of no SEC. I think we had a much better market, more efficient. I think there was less fraud back then than there is now. But so as far as these comments on Bitcoin, look, more regulation is going to hurt the industry. It's not going to help the industry because the whole selling point of crypto was its lack of regulation. That was like why it existed. Just a couple of years ago, a lot of these retail investors had got in, and now they needed more buyers. And they were trying to entice the institutions to come in because they had the big firepower. And so in order to make it marketable to the institutions, that's when they started talking about, we need regulation, we need regulation. But I think now, given that there was a big collapse, because the whole institutional interest was all the FOMO. Like, hey, look at this thing. It's the best performing asset. You got to get in on it. If you don't get in, you're going to miss out. How are you going to explain to your investors that you missed this greatest investment opportunity? So I don't think the institutional demand is going to be there anyway. So I don't think no matter how much regulation you get, the institutions aren't going to want in, but the individuals are going to want out. I mean, you're going to destroy whatever the use case was initially. And I don't think Bitcoin in itself is big enough to start a financial crisis. I mean, yes, a lot of people are going to lose money in crypto. All the money that was made in crypto is the money that's going to be lost. It was a zero-sum game. And by the way, if you made money in crypto, don't necessarily count your chickens yet, because you're going to get sued. A lot of people that made money in crypto are going to get sued by the people who lost money in crypto. So at the end of the day, it may be the lawyers that end up with all the money, which unfortunately is normally the case. But to the extent that anybody loaned money against crypto assets, yeah, they're going to lose because those loans are going to go into default. and the collateral is not going to have any value. But crypto is kind of like the tip of a much bigger iceberg, right? So when crypto crashes because of leverage and speculation, then a lot of other companies are going to collapse. It's not crypto in isolation. It's just the weakest link in a very weak chain. So everything is going to unravel, but it's not going to be crypto. But certainly, a lot of money was wasted in crypto. I mean, think about all the energy that went into creating Bitcoin. I mean, we could have used that energy productively. Instead, we squandered it, producing nothing. Think about all these blockchain companies and crypto companies that have been started, that have hired some really bright kids out of college that could have been doing something productive with their time and their minds. Instead, they wasted it on all this nonsense. And this is all a function of what the Fed did. I mean, this is the malinvestment that you create when you artificially suppress interest rates and you cause everybody to act, like a bunch of idiots. I have no intention to buy Bitcoin, nor do I have any influence on Bitcoin, because the whole time Bitcoin was going up, I was saying the same thing. It didn't stop it from going up. So no one cares. In fact, there's actually programs out there that people wrote, like whenever I tweet about Bitcoin, they automatically buy Bitcoin on these programs. It's like you buy the Schiff. And they launched these programs when Bitcoin was around 60,000. And so,
did they make money?
It was a very good, of course not. Everybody, you should short Bitcoin every time I talk about it. You'd have made a ton of money. But, the more I talk negative about Bitcoin, the more everybody wants to buy it. So, it's not my fault that it's coming down. But look, now the bubble has popped. And so it's going to keep coming down. Now, people still want to make fun of me and say, well, Peter, if you'd have bought it 10 years ago, you're still ahead. Yes, okay, but most people bought it a year ago, 2 years ago, 3 years ago. They're way behind.
Yeah.
And in another couple of years, even the people that bought it 10 years ago will be losing money. They were released earlier today, and it's a basket of indicators. In fact, I think for this month, one of the ones that worked in the favor of the index was the stock market, because it had rallied off the lows, but that rally is quickly reversing. In fact, many of the most popular stocks are at 52-week lows. In fact, multi-year lows for many of these stocks today. But I think the bad news for the people still holding on to those stocks is it's a long way down. Even though they've fallen a long way, they still have a long way to go because they were up at such ridiculous levels. In fact, some of these companies are going to go to zero because they're going to go bankrupt. And, in the environment of rising rates and higher inflation, a lot of these companies that have no earnings are going to have a difficult time staying in business. Maybe it's a depression. And that would be the way that they would end up being wrong. But if you remember, the Great Recession started in 2007. But I was doing interviews on popular shows in mid-2008, and they were saying there's no recession. So what happened was all these economists went backwards and revised down all the data, and then they said, okay, I guess we were in recession. They didn't even think a recession was coming. But the fact of the matter is we were actually in one at the time, and they couldn't even see that. And I think this is the same situation today. We actually had negative quarters. The first 2 quarters were negative. The third quarter, in fact, we got some numbers out on that today. I mean, it was up maybe 3% or so. But all of that was due to the improvement in the trade deficit during that quarter. And a lot of that resulted from the fact that we were able to export a lot of the oil that we were pulling out of the Strategic Petroleum Reserve. But we're going to exhaust that reserve sometime next year, so that's not going to be able to offset our trade deficits. But also, we had the big rise in the dollar. Well, in the fourth quarter, we've had a big fall in the dollar. It hasn't lost all of its gains yet, but I think it will in 2023. But as the dollar weakens, that's also going to push up our trade deficits because it increases the cost of all of our imports. So I think the help that we got in Q3 was a one-off quarter. We may end up with a negative print for Q4, we'll see, but I think we're going to get quite a few negative prints in 2023.